The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on the 7th day of May, 11 o'clock till noon. Tiger Technicians Hour. I'm quickly showing this 10-minute chart. Had a very nice move up to the 2116.25 level, peak in the 10-minute chart. Pulls back very sharply. It comes down to the low so far of 2109. Is that 9? Yep, 2109.25. Had a nice bounce. And now comes the really big test. My thinking for my subscribers this morning was that there would be upside action, but then by the end of the day, we would probably pull back to about a plus 20, minus 20 Dow. You see the chart right here on the E-mini, 10-minute E-mini, is saying you could, in fact, make it real simple, a break over the 2115.50 high of 10 minutes to 11 o'clock, would say, you're going to be testing that peak E top that was made at 2116.25. Just keep it real simple. And if there are two 10-minute bars that close underneath 2112, the 9-period moving average is at 2112.18. So let's round it out to 25 cents upward or 00. So I'm saying under 2112, and we will start to see the market pull back. But at this particular point, there seems to be little surges of buying that constantly are buying. People are buying the dips, and that's the way we're looking at it. Now, if I look at the 120-minute chart of the E-mini, this is a very interesting chart because you've made your peak D. You went to the trend lines that we were looking at, snuck above the previous high in the weekly charts, and here we are in a high-level consolidation. Again, my thinking here is that there will be some resistance and that there's a good chance that over the coming, let me put it this way, between now, so it's 11:08 tonight, going into 10 past 10 tomorrow. So in the next 23 hours, my thinking is that this time tomorrow, about an hour before this, there's a pretty good chance that we'll be testing some levels down the 206 to 205, 2106 to 2105 area. In the E-mini, it's at 2114 right now. This is the way the chart seems to be formulating. But now I'm going to go through some other things that I believe are very important at this particular point. If I look at the Dow in two different ways, first of all, let me look at it as a 120-minute chart. It was successful in holding the neckline in the 17,400 level, even though it just briefly stuck on the 18th into the 19th. It went right down below it. It went down to the 17,000. I think there was 340 area. Let me double check. 17,000. Did I say 3? It should have been 5. 522 area. 17,522. No, that doesn't make sense at all. Let me just say that again. Let's go through this carefully. 17,331. I thought that it was close to the 17,340 level. And then there was a very strong rebound, a V-shaped rebound that went to a peak E, pulls back, goes to a nominal F at 17,899, pulls back, makes the cup formation. And that cup formation said that there should be a break. If it goes above 17,899, that's a positive, and it should go even higher. And what it's done is it's gone to leg D, with a couple of signs saying that we're running out of upside energy on the shorter term. That's all just on the shorter term. Now let me show you something else that I think is current. It's as we speak. The Dow is testing a trend line that is like a magnet to the upside within a rising V-shaped pattern, but the V-shape is not expanding, it's contracting, going to an apex. And that apex takes you to the 18,167 level. Wow, we could do it much sooner, but it takes you there by the 13th of, the 20th, by the 20th of June. But there's another shorter term one that takes you just to this most recent high on the 27th of April, the high of 18,084. And that says by the 13th of January, 13th of June, we should be, if this line is acting as a magnet, saying that every time there's a dip, you're going to come back and test that, then that says that the 18,167 level, that's 170 points from 180 points from where we are right now, should be hit by a Monday this coming week, Friday to Monday of this coming week. What it does also say is wait a minute, why don't you look at the chart that has all the technicals involved? It has a 9-period moving average instead of just that red 20-period moving average. So when I look at the Dow chart with the MACD and the stochastic, the MACD is still good. Stochastic's at 89%. Wow, that is really nice. And that's saying that that even if there is a decline, there's tremendous support. And 17,840 is a 9-period exponential moving average support, key support in the daily chart of the Dow. And that's really what we're looking for. I'm kind of hoping so we can add to the long positions to have some kind of a dip. And then maybe by Thursday or even Friday, we start to make new recovery highs. So I just wanted to get that out of the way. I wanted to also say that running the numbers down, you've got the Dow, INDU, up 74 at 17,995. It has hit 18,000. It's a very important magic number. I said to subscribers that 17,990s should be very strong resistance. So we'll see how this is going to hold. Most important, why? Oh, I think I'm going to have to get rid of some charts here because it's starting to interfere with the analysis, and that's really not very good at all. Let me just go to this current and make that. Oh, come on. Here we go. So what we're looking at is that the monthly chart is starting to improve because we're getting into the wick. We're right into that wick of 2 months ago. And I said if we can hold there for 2 or 3 sessions intra-week, that should say that we're going to try to go for the 18,167 level. So let me do this. I'm going to run the numbers now. And as I'm running the numbers, I'm just going to exit out of this, close this workspace, because when I bring it back, it'll be right there. So I'm going to run the numbers. The Dow is up 77 at 17,997. The S&P is up 7 at 2116. The comp index is up 70. No, comp index is, down 1 at 4966. Now, this is going to be very interesting. You've got gold down 4 at 1243. Silver's down a little bit at 16.36. Platinum's down. High-grade copper is down. Actually, high-grade copper is down at 205. I'm going to have to look at that in a moment. We'll bring it back right now. Let me just say recent works. Come right back to the... There it is. It'll be back. So while I'm doing that, let's look. Bonds are up 13.30 seconds at 166, 13 ticks, and 16.30 seconds. And you've got the dollar, which is down just a fraction at 93.80. And you've got the Great British Pound is up just a tad. There it is. So what we want you to see is how does the weekly chart formulate? You've got a W formation. You've got a little cup formation. It suggests that over the period of the next 3 to 5 sessions, we should be trying for the 18,167 level. If we take that out, that's going to be leg D in the weekly chart, but it's going to start raising the monthly chart to a leg C in the Dow. Isn't that interesting? I'll be back. Basil Chapman, Dow's up 74. We'll be right back. Take some questions.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back, and I'm going to go to something now that I think is quite pertinent to exactly where we are. This is in the den. Peaky says, I lost it. It's right here. Right here. Oh, there it is. Basil, if we look at the 10-year Treasury, looks like it's going to shoot for the high in the coming weeks. Well, first, let me just, the charts that you're looking at now, this is WOD, iShares Global Timber Forestry. It's in leg D. It's right at resistance. It's a really important cuspy moment. The HGX has not gone to 38.36. 237, hasn't broken to a leg C. It's trying to do that. This is that chart that I always show with the iShare Global Timber and Forestry ETF above and the Philadelphia Housing Index trading at 236.45, up 82 right now. Very important. See, this is a trend line. That's a trend line. If both of them decisively break over the next 3 days, it's a weekly chart, but over the next going into Monday or Tuesday, it's going to be really important. I wanted to show the 30-year, 10-year, and 5-year T-note yields, T-bonds and T-note yields. This is where the whole thing started. Back in June of 2007, there was this cluster formation at 5.4% in the 30-year. Look at that cluster formation. Everything is right at the top. And over a period of time, you go from 5.40, that's 54.08, to 22.26, 2.26%. That is 50, so that's cut in half. And I would say, what's that, about a 60% decline in rates. That is amazing. And my theme has been the Japanization of our bond yields. Not a theme for a day or a week or a month or a year or even 10 years. It's even longer than that. However, what I was looking at the other day before the Fed statement, and I did it in my webinar on Thursday a week ago, this past Thursday. In that webinar, which is still available, and it's going to be one of the most pertinent webinars that I've ever done, because it has the outlook for skyscrapers, a whole bunch of things. And just this week, on Sunday, I got a note from one of our subscribers to say, hey, look at the, I got yesterday, look at the New York Times. It had this whole article on skyscrapers in the magazine section about New York skyscrapers. So, of course, I ran around trying to get one early last night. Couldn't. I called the neighbor. Thank goodness she had still got hers, hadn't dumped it yet. So I've got this, and it's spectacular. It says, it's a whole magazine. It's the New York Times, June the 5th, 2016, the New York Times Magazine. And I showed subscribers some of it, what's going on. It's really nicely written for a magazine and all that. Just doesn't get into the depth that it should. However, what's really important about it is that it discusses what's going on, that the only way to go is up. And that's that vertical thing. And I've always said that the skyscraper phenomenon occurs as markets start to go to their coda phase around the world. Doesn't matter where it is. And that's what we'll be looking at. And that's where we are. We're in the coda phase. And the coda phase, as the market says, the market, I don't know how it's going to do that. I had a whole section that I called the possible Trump rally. I don't know who's going to get the title. There's always a title with these things. Who knows who it'll be. But whatever it is, there will be something there will be a way to move this market higher. Will it be this summer where we go to all-time highs, or will it be later? At this point, how the market acts over the next week or two is really important. But what I did want to show is that we were here last week. We're kind of over there, right? This bar hadn't completed. We were up at the top of the bar. And what I said is, regardless of what the Fed is going to say, regardless of what the Fed is going to do, the way I always analyze this particular pattern is that the lowercase h becomes an lowercase m pattern, and it could continue for a while. And that the inevitability of this particular chart formation is that most often there's a sudden spike if it takes out the middle low. In this case, the 30-year has a low of 25.11 the week of the 8th of April. If it takes it out, and the low last week was 25.11, so 25.11, we made a little double bottom potential here. The low that was made back in the week of the 26th of February was 25.13, 2 cents higher. So if, in fact, you don't have to close, but if the TYX, the 30-year, which is the white one, closes underneath 25.11, let's call it 24.90s, closes there, there's a chance you're going to have one sudden swoop that tested 24.09, and that's, excuse me, and that's where we can see a sudden spike, and that spike can take you all the way back to near the top of this arch formation. The 10-year yield, now let me just open this chart up a little bit, so what you'll see is this, right here. Where did all those notations go? That's interesting. Hey, somebody stole my notations. Let's just see if I can squeeze it close enough that it's somewhere in there. Yeah, there it is. Okay. I should have had that all in one rectangle. So if you're looking at this particular chart right now, you will see that I've lost it again. There it is. That the 5-year note, T-note yield, the FVX, is right down here. It's holding a little better. It hasn't dropped as much, but it's in the trading band. It's at 12.24, 1.24. The 10-year T-note yield, the TNX, is right there. It's testing those lows. And the TYX, if I can find it, the TYX, the 30-year T-bond yield, TYX, is white. That gold color, so it's white, browny gold, and a light blue, the cyan color, is testing the double bottom. Whereas the 10-year hasn't taken out the low of 16.85. So it's at 17.11. If the 10-year breaks under 16, call it 1680, if it closes, especially if it closes, that's something altogether. I'd like to go to Mark in Fort Collins. Mark, how are you?
This is Basil. How are you?
I'm well, thank you. Yes.
All right. Talk to me about this IBB that we've been trying to get long. I was thinking of taking a quick stab at it, being that it's had a nice pullback today, but I'm a little worried. It's sitting right on the 9 EMA on the daily. And
yeah, let's talk about. So there are a couple of things that have been going on. So we've had the IBB. We've done well with the IBB. We've also had the BIB, which is the 2 times longer. We've had the BIS, the 2 times short. When I add them all up, we're just slightly ahead in one and slightly behind in the other. But the IBB is the one that we've had the most success with. And what's really important is I've sort of stepped away now. I'm waiting to short. But I don't know if this is just the time at this particular point, and I'll tell you why. It went to, from the low of 248.90, I'm talking about the IBB, this is the iShares NASDAQ Biotech ETF. It goes down to 248.90 on the 12th of May. Then it has a great rally. Oh, is that yep, that's the break coming up. Well, breaks are very important, and it runs to a peak A, a peak B, and a peak C, and then instead of having just a little minor pullback, it has a little bit deeper of a pullback, and that's saying it's going to have it could have one more lunge towards the D at 289.71. So before we get cut off, let me say I want to talk about this when we get back because I had a couple of email questions as well. I'll be right back, Mark.
Okay, thanks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so we're back. So it's really important that I did a little bit of work during the break. I did a lot of work, actually. I ran through a whole bunch of stocks that were mentioned in the email as well as from the den I'm looking at. But this is the most important thing. Mark, there was absolutely no reason why the IBB, which of course yesterday we went long via the BIB, got stopped out for a really small 60-cent loss. That's really not very much. And then the darn thing screams up and does very well. And I'm saying to myself, something's going on here because I've got to obviously now start looking at the other side of it. But at a peak C with the technicals still strong, it's down. The IBB is down 7, minus 2.45. So I wanted to see there has to be. The majority of stocks seem to be doing well in the biotech area and the iShares. So then I go BIIB, which is the BIIB is Biogen IDEC Pharmaceutical, Biopharm. It's down 37. It's down 13% at 252. So there it is. It made a peak E. And I mentioned last night, go through all the ones that I love to look at. For instance, Gilead. Gilead is making a B, C, it's in leg C. It looks quite nice at 87.71, just on the counter generally. I looked at Amgen. I don't know if I updated that, though. Yep, I did. Made a peak B. It's only pulling back $1.18. It's $159 stock. Looks like it still wants to go to a C. So I went through a Basil gene I wanted to go through. I was quite satisfied. I just didn't want to put the trade on. I don't want to keep jumping in and out. I wanted to say, okay, let's see what happens next. So fortunately, we stepped aside. And at the same time, I really looked very seriously at the BIS, which is the two times short the IBB. But I decided, you know what? I've got strong technicals in many of the stocks. Let's just step aside. Now what we're looking at, and I got an email to say I'm in the BIB from before you put it on at the 4608 area, and now it's at 4609. What should I do? My thinking here is, if I'm correct that we're going to have a little bit of a pullback, but the IWM, the Russell 2000, which also actually has biotechs within it, and the QQQs, which obviously also has some biotechs, still have to make higher highs before I really want to even think about the short side, because the weekly charts are still very strong in all the indices. I'm going to suggest that it's obviously now it's a lot more risky, because now we're seeing that one by one, they constantly keep shooting down some of the biotechs. None of them have had a big 40-point move to the upside, but many of them over the past 2 months have had severe declines. And if I'm looking at the BIB, I'm going to just say to you, you know what, Mark, I think there are easier plays than this right now. I do see a trade, and I do see that if the market only holds steady and doesn't pull back very much before by Thursday or Friday, we go to that leg D and the IWM and the NASDAQ. And I'm thinking also the E-minis need to do the same thing. That means they need a full 24 hours to be down. I think that I'm looking at this and saying, you know what, there's a little too much risk, even though the bias right now, at least for me, is to say that there should be at least a little bit more attempting to go to the upside. I'd say have a little patience. There's a chance we might. I don't say we're definitely going to, because if the weekly chart really does improve and the BIB and the IBB spike above that arch high that was made in the IBB, it would be the high of the 22nd of April, the week of the 22nd, going above 289. Let's say going into the 290s, I'm going to hold off doing anything. But if it struggles here not to get above and make another arch that goes like the bonds, well, the bond yields, that H goes to an M position, I'd much rather you be looking at another chance to short, because it'll be up at the top range. And this has just been a perfect short at the top of the range, buy at the bottom of the range. And until that changes, I think that's the way I'm going to treat it. So, question for the a subscriber who got in earlier on the BIB. I would make my stop fairly tight from where we are right now, because it's about where you got in. And I'm thinking it will rally. It might not go to the D, but it looks like it will go to the D. And that's the same thing with the IBB. And I'm going to say to you, if you want to use an option, you can use a 280 call option. You've got a week to go. You get a nice price right now. But that's about the way I would do it. I'd much rather put a little money to work with a very high reward to risk, and that way let it tell you what's going to happen. Am I making sense to you?
Yeah, it did. I'm just trying to figure out the wave count here on the daily.
Daily's at C, peak C.
I thought we just made a D 2 days ago. Am I wrong?
No, I don't have any peaks until the very first one, which is at, you might be looking at the gap by mistake, but 275.90 on the 25th of May made peak
right.
A.
Yeah.
So you might have used the gap by mistake.
Oh, wait, hold on. Isn't peak A at 275.90? Is that right?
275.90 on the 25th, and then 2 days later, it breaks above it, starts leg B. Peak B starts at 286.29,
right.
pulls back 1 day, and yesterday goes to That's the other thing. When I see markets going to just slightly higher highs, going to B and C, I start to put the brakes already on. The yellow light is flashing to say, whoops, we might not get much higher. Now, here's the other thing. The reason why I want to say, if I'm wrong, IBB will go to 288. The moment it goes into the 288s, that 200-period exponential moving average at 291.62 could become a magnet. Besides which, I do think that there are fund managers that are buying the IBBs now that they've been hammered to say, hey, I think they're building some kind of a base and they're going to look great. I think that they're only going to look great for a little while. I still have a target for the IBB down in the 220, 200 area, looking out longer term.
Okay.
Hope that covers a lot.
That covers a lot. Do you think that if you have a moment, I'm wondering if the SMH or the XLE looks a little bit more vulnerable on a pullback, but let me know what you think about that.
I was going to say to you, let's use the SMHs as an example, but then I got sidetracked and I forgot to even say that. If I look at the weekly chart, I'm not sure that I was correct in calling that a C-, although everything was in place to call it a C-. This could be, in fact, a D that we're in the weekly chart, but the MACD and stochastic are good. The monthly chart is good. The daily chart is very extended, but as long as the MACD is very strong, which it is, this is the SMHs, folks, this is the market vector iShares, the market vector Van Eck, Vectors Semiconductor ETF. And what I'm looking at here is that from the 50.88, it's gone to a peak D, and today it's snuck to an E just slightly higher. So you can see the cluster of peak C, peak D, leg E. I think we're real close to some kind of a pullback. It might be related to the results tomorrow. I might even get a chance to talk about that a little later on. The results tonight, the reaction tomorrow. But I'm saying to you, yes, I think that I don't want to look at the short side of the SMHs, but I do think we could pull back 2 points, getting to the 55s, and that's where I'm going to have to make a decision. Is this holding well? Is the stochastic good? Is it still on a buy mode in the daily? Is the weekly, which is actually now right this week, went to a buy mode? Is that going to hold? And the monthly? And do we want to climb on board? We just missed going long. It's a shame. I should have just jumped in and said, to heck with it. Let's just buy the ones that we wanted. But I'm looking at it. I'm trying to still be as conservative in a way as possible. I like the SMHs, so I would not be looking at them as shorting, but I would agree with you. They're more extended, and I think they could pull back. Hope that answers all those questions.
Thank you.
Thank you very much for calling. Always a good, perceptive question. Dow's up 69, S&P's up 7. I think we might be pulling back very soon. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I just want to talk about this chart pattern that we're looking at right now in the E-minis. We went above that level, and then we powered quickly, as I said we would if we did break that level, to the high that was made right here. So that was the 2116.50 high that was made at 5:30 this morning, pulls back to the 2109s, runs back up, and it goes to a slightly higher high, which is 1650. Oh, that other one was 25. Yeah, 25. Now we went to 50. So it went above, but it hasn't closed above it yet. So the way I'm looking at it, you see I've drawn this V-shaped pattern with the Chapman wave plumb line. When you get to the plumb line match from the left side lip, in this case to the low, which I consider to be a low that has the potential to be a halfway marker between this side and the mirror image on that side, what it says is that if you close, whatever it is, if it closes sharply above the left side lip, you've broken out. You've really started a move that has the capacity to continue as a peak A, B, then a C and a D, right? That's number one. Number two is when it starts to struggle and that lip becomes a resistance area, you've got to watch it closely because it implies that even if it was to go slightly higher, maybe it could go to a C or a G/C. You got to be careful because what it's really saying is that it's starting to have the potential of an arch formation. And that arch formation says that that left side high that was made could become the fulcrum for a move that goes up, but then comes back and has to test it. And then if it starts to close below it, you've got your alternate count. This is, you know what, that wasn't an F/B with a chance of a B. It was really an F. And where does that kick in? If the move we're looking at right now starts to stall and the E-minis at 2115.50 suddenly break down, and if they take out the dashed uptrend line support at 2113.50, that's 2.25 points from here, that's a negative and says, uh-oh, now you've got yourself a rectangle formation with lower highs and lower lows just trying to bounce around. So that's the way I'm looking at it, number one, in the 120, in the 10-minute chart. And we'll know within minutes because it's trying its best to hold this moving average right here, which is, in this particular instance, let me see, that is the 9. I believe that's the 9. Yeah, that's the 9. And that 9, this light grayish color one, is holding nicely. You break that, it says be real careful because I'm going to try to test the dashed line. And then the 9-period moving average, let me just double check. Got to get this right because I changed things the other day. So that's the slow. Okay. So the slow is the 9. Now, how can that be? Oh, man, I just got this all confused. So this is the faster moving average, and its input is 9. Slow is 18. I got it. Okay. So in this particular instance, gray is the 9 and black is the 18 and a 21.13. All the numbers are exactly the same. I just need to figure out because I've been experimenting with different moving averages. All right. Now let's do this. You see how it's trying to climb? But it can't do it yet, but it's trying. We'll see if it manages to do that. Up there, it's very close. It's very close. It could do it. Okay. BMY was mentioned in the den. So BMY, this is another one. I want you to just pure on a technical basis. I'm going to do this real quickly. This is an E/A in an Chapman wave instant restart. I'll circle it in a moment so I explain it to you. That's an F/B. That is a G/C. But the MACD pulls back sharply. The stochastic pulls back sharply. I would have said, oh, absolutely, that's a G. But then wait a minute. It bounces almost to the exact point. Then I would have said, oh, okay, so that's C1 and this is C2. Same result if it breaks above. And then what does it do? It pulls back, goes to peak A, and then it goes to a D/B. So here I am looking at BMY, which is Bristol Myers. I wanted to do this to show the Chapman wave instant start within 3 bars. It breaks to a new recovery high without taking out the low. That's very important. Look right there. Chapman wave instant restart in my CD introducing the Chapman wave methodology. Talk a lot about it. And then look what happens. It makes this rectangle formation, then a cup formation, and then boom, breaks right out with the MACD strong and stochastic at 86%. Weekly chart, leg, brand new A, B, C, D. It had a D before. It's got another D. So all of a sudden, I'm looking at Bristol Myers, and now I'm saying, oh, do I want to buy it right here? I've got a potential D in the daily, a potential D in the weekly. I've got a potential. Wait a minute, what's that in the monthly? The monthly, there's the only way I can count it is a G/C. So I'm going to do this. I'm going to call it a C for now, and I'll say, okay, you show me if I'm wrong. No, just for technical Chapman wave explanation, I'll put G/C. But my eye says that there's a real good chance that that was a low of consequence. And if it is so, it says Bristol Myers could pull back, but it's still in a buy mode. If I definitely said it's a G, then we've got to look at it completely differently. Say, oh, gee, that's dangerous. You can still move higher, but you better put a stop in because you don't want to be buying and holding here. But if it's a G to /C, it means it should make higher highs. So when stocks are like that, my suggestion always is if you have it, just hold it, take one part of it that has a tighter stop, and that'll be your reward for holding it, and that'll be money to put back later, and you're whittling away a little bit as it gets closer to some kind of a deeper consolidation. But if you think it still has highs to go, and the weekly technical say, hey, this is a leader in this environment, don't get out too soon, then I would just say if you aren't in it, you do have to wait for a better entry point, but if I think it's going high, you could actually nibble at 74.33, BMY, 74.33, up 4 cents right now. But my recommendation would be let it get back into this congestion area between 72 and say 71, even 70.80. Let it get in there and see how it holds. Might be another big move to the upside, but that also could be a churning, a kind of a diversification happening as portfolio money managers take out some money here. And so that's what I'm looking at in BMY. I wanted to mention it because I mentioned in the den as doing very nicely. So the TNX, the question was TNX, USD ultra low. TNX 10-year yield wave count usually heads up with the S&P. So I'm going to go to the TNX right here, TNX.X, and you'll see that it's pulling back. There's a divergence between what's happening in the Dow and the S&P and the TNX. It's pulling back. I think that the TNX has broken that support in the weekly and it looks kind of vulnerable to pulling back a little bit more before there's a stronger rally. So that's the way I'm looking at it. So GT, I hope that answers your question. DAL, which is Delta Airlines. Delta Airlines making the H pattern. This is a little different. It's the same idea, but look, it's making higher highs and higher lows. That's what it's making. So if Delta at any point breaks, instead of today being up, if it was down $1 or $1.40, it's up $1.40, it would have broken support. I would have said, no way. So all I'm looking at in Delta is that there's the H pattern going. It's at 42.68. I think Delta has a chance to maybe get to the 43, 44 area, but I actually think that it's going to start to stall very quickly. Let me get rid of that. We've got that beeping again, because I still haven't fixed it. So Delta Airlines, I'd be real careful on the question of the XAL, which is having a nice spike today at 87.30. You know, it's worth talking about it because it's part of the IWM. Remember, part of the IYT. I'm looking for the market to pull back later today into tomorrow. And maybe by Thursday or Friday, we get a big spike to the upside, the final one before we pull back deeper. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
As during the break, I was reading just a fabulous, it's more like an article than anything else, from Chris, one of our Tigers. And there's so much really good information, but I'm just going to, I only glanced at it. I wanted to know about the US dollar and bonds. You know what? The gold at this particular point, I think, is establishing some kind of a deeper, there's something going on that's really important. So I think gold is more important than the dollar. We're out of our dollar long. Made a little bit of money and now we're out of it. I need a day or two to just let everything resolve. I want to see how the miners work out, how the dollar itself, how the other European currencies, etc. But let me just do this because I think this is a great email. One of the things I glanced at was what you said about Toronto, that you're from Toronto. You've never seen this in your lifetime. You were just there, and it's a boom like I've never before seen in my 45 years. Cranes as far as the eye can see, condo on top of condo, old historic landmark buildings torn down to cram more condos and exquisite brownstones in historic zoning laws. Zoning laws are changing. 1 million price conduct developers are having to buy the density rights from churches, schools, etc., in order to build taller buildings. This is a phenomenon that happens just one in every big, huge cycle. It doesn't happen in a 10 or 20, 12-year real estate cycle. It happens in the big one. And this is the big one. There's just no question in my mind. So I'll talk about that. In fact, I'll talk about it a few times, going even into Friday's Tiger Technicians Hour. Let me just go back to the XAL. This is a huge breakout move of 2.59 and 87.43 on the XAL, the ARCA Airline Index. But it might stall right here at the 200-period moving average, which is just a tad higher. This is going to be very important because if it starts to break into the 90s, I have to consider that it's going to go to leg D. I need both the airlines, I need the IYT, I need them for this big move up if it's going to be the coda move. And if it says that we are in it right now, well, IYT is looking beautiful. This is a very strong leg C to the upside. Yeah, I'm going to have a look at all the areas because the next pullbacks might mean we want to be buying into the trucking and the rails, etc. I don't know. I'm just saying this is a really good move, but it's only a single move, and I need to see follow through in the weekly chart. And the weekly chart says at 141.59 up $1.82 in the IYT. A lot is going on, but I need to study to see where and why and how. But we are looking at a phase right now that says to me, we are building impetus for a move into test the old highs, the all-time highs. But right now we could be in the choppy phase right here. But the choppy phase should be, if I'm correct, shouldn't last more than a day or two, and then we're back to the long side. So what happens in the next 2 days is going to be really important. I wanted to talk politics, the politics of politics. Hey, as far as I'm concerned, the 3 years of the Republicans in the 1920s and the 3 years possibly for Democrats in the 2000s, I'm seriously considered. I discussed it a year ago. And how it could unfold, why, a whole bunch of things. I'm not discounting it. I'm saying it's on the table as far as I'm concerned. Then, of course, I spent the whole week. Could I look at AGU? AGU looks very good. Question in the den. Potash, which we missed. Look at that big move up. It's up 18.31. AGU, which is never remember, Agrium, I think it is. Yeah, Agrium Inc. A very sharp leg, F/C in the daily. Getting a little toppy, just about to get to some kind of resistance. But this is very important stuff that we're looking at. And it might be telling us a little bit more about the FXI. China, yeah, look, China had a huge move up to leg C. Then, because the China chart is looking like the commodity charts. So we'll do a lot more tomorrow. Stay tuned. Check out my opening call. Some of this I'm going to be discussing overnight when I do my report tomorrow. Very important phase we're in. Very, very important phase. Should I say it's a very, very important phase? All right, little joke there. I'll be back tomorrow. Hey, stay tuned. And don't forget, Steve's got a webinar coming up, and he's got a show at 1 o'clock. And there's Dave White and Tom O'Brien. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.